Warren Buffett is arguably the greatest investor of all time. He has grown his wealth by investing in and acquiring business with strong competitive advantages, trading at fair or better prices. This investment style has served Warren Buffett, trades, portfolio, well, his net worth is now over $100 billion. Although Berkshire Hathaway is renowned for not paying dividends because it has better uses for the money from its shareholders, Chairman and CEOs, Warren Buffett undoubtedly enjoys receiving them. Dividend income for Berkshire rose to $3.8 billion in 2018 alone, and Buffett predicted that it will rise in 2019 in his annual letter. Dividend stocks make up a large portion of Berkshire's stock portfolio. In fact, each of its top 10 holdings pays a cash payout, including American Express, Apple, and Coca-Cola. Despite the fact that Buffett has never been one to aim for yield, several of Berkshire Hathaway's income-producing stocks are rather generous by today's standards. Many dividend-paying equities are held by Warren Buffett's Berkshire Hathaway. Here are Warren Buffett's top 5 dividend-paying stocks. Bank of New York Mellon. Bank of New York Mellon is not exactly a household name, despite its impressive-sounding name. However, it's a significant problem in the financial industry, and Warren Buffett has long been a supporter. The 9th largest bank in terms of assets in the U.S. is Bank of New York Mellon. It is a custodian bank that keeps assets for institutional clients and offers back-end accounting services. To be more precise, in the third quarter of 2010, Berkshire Hathaway purchased its first shares of BK, paying an estimated average price of $43.90. In the fourth quarter of 2018, when he expanded his holding company's investment by 3% or more than 3 million shares, Warren Buffett last upped Berkshire's position. BK is one of several banking industry dividend companies owned by Warren Buffett, and it has a solid track record of payout increase. In July, the bank last increased its quarterly dividend, bringing it to 31 cents per share, an 82% increase from 5 years prior. Even better, there is still lots of opportunity for the dividend to grow in the future. Just 29% of Bank of New York Mellon's earnings are distributed as dividends, a good ratio by any measure and lower than those of its two major custodian bank competitors, State Street and J.P. Morgan Chase. J.P. Morgan Chase. Speaking of J.P. Morgan Chase, it seems like it was only a matter of time before Berkshire Hathaway started investing in the country's largest bank by assets. Warren Buffett has been going all in on big banks over the past year. JPM was initially acquired by Berkshire in the third quarter of 2018 and has subsequently been expanded. Warren Buffett's avowed affection for CEO Jamie Dimon is one of J.P. Morgan's draws. Together, the two have formed a healthcare project with Jeff Bezos, chairman and CEO of Amazon.com, Amazon, in an effort to increase coverage and reduce prices. The habit of providing quarterly profit estimates was also criticized by Dimon and Buffett, who stated that short-termism is hurting the economy. J.P. Morgan slashed their dividend during the Great Recession and financial crisis, joining the majority of the large banks in doing so, from 38 cents each quarter at its peak in 2009 to 5 cents per share that same year. In 2011, it supported its dividend back up to 25 cents quarterly, making it one among the institutions that rebuilt its cash distribution the fastest and most aggressively. The dividend has increased 220% since then, reaching its current quarterly payout of 80 cents per share. Store capital. In the summer of 2017, it was significant when Buffett disclosed Berkshire's holding in store capital. Real estate investment trusts, REITs, a vehicle to invest in real estate without actually owning the assets, were never a significant portion of Buffett's portfolio before store. However, the Oracle of Omaha's preference for dividend equities is perfectly compatible with REITs' income-friendly characteristics. As a condition of receiving large federal tax benefits, REITs must distribute at least 90% of their profits as dividends to shareholders. Real estate thus consistently outperforms the market and is one of the highest-paying industries on Wall Street. Although store capital's yield of 3.6% is less than the FTSE Nareit All Equity Rates Index of U.S.-listed REITs' average yield of roughly 3.7%, it is still much higher than the average yield of the broader market. 109 different industries are represented in the single-tenant buildings that STORE invests in. It is a wager on brick-and-mortar retail, which was formerly believed to be in irreversible decline, but it is mostly a wager on the merchants who stand to lose the least from the growth of e-commerce. The main base rent payers for the STORE are chain restaurants, childcare facilities, fitness centers, and movie theaters. Buffett noticed value in this place, and he noticed it for a while. Buffett researched the rate for 3 years before making the investment, according to STORE Capital CEO Christopher Volk, who spoke with CNBC. The arcade now has 18.6 million shares. After Vanguard, Berkshire is STORE Capital's second largest stakeholder, with an 8.2% position. PNC Financial. Another component of Buffett's recent significant investment in financial sector dividend equities is PNC Financial Services, the second largest regional lender in the United States and the sixth largest bank in the country by assets. The dividend history of PNC during the last 10 years is similar to that of JP Morgan. In 2009, the dividend was severely reduced, and since then, there have been significant increases every year. In PNC example, quarterly dividends were reduced from 66 cents to a dime in 2009 before being increased to 35 cents in 2011. Since then, the payout has increased 229%, including a handsome 21% increase that was announced in July. For the first time in the third quarter of 2018, Buffett made investments in PNC. In Q1 2019, he increased Berkshire Hathaway's shareholding by a further 4%. With 1.9% of the outstanding shares of the bank, the holding company is currently the 10th largest shareholder in PNC. Buffett has long felt at ease making investments in the banking industry. He stated that the industry fits within our circle of expertise to analyze during the Berkshire Hathaway annual meeting in 1995. Buffett certainly sees a lot of potential in this area of the market given Berkshire's significant push into banks over the past several quarters. BRK. W has added to or launched new stakes in more than a half dozen financial equities recently. Phillips 66. One of the two energy-related investments made by Berkshire Hathaway is Phillips 66. Since the oil and gas firm was separated from ConocoPhillips in 2012, Berkshire has owned a share in it. Since its first public offering, PSX has been a leader among dividend companies, constantly increasing its dividend. The current quarterly distribution of 90 cents marks a 350% increase over its initial disbursement of 20 cents in 2012. But Buffett hasn't remained because of that insufficient justification. Buffett has significantly decreased his holding in PSX during the past year or two, after previously giving the stock high acclaim. He sold a massive 35 million shares in the first quarter of 2018, lowering Berkshire's ownership by more than 40%. Fair enough. That decision was merely taken to prevent administrative hassles. The buyer of the shares was, in fact, none other than PSX. The problem is that Buffett keeps selling off PSX stakes owned by Berkshire Hathaway, with 9.8% of all outstanding shares. BRK.B continued to be the company's largest stakeholder, even after the significant sale back to Phillips 66 in early 2018. Buffett, though, persisted with his selling. He reduced Berkshire's shareholding by another 53% in just the first quarter of 2019. Just 1.2% of Phillips' 66 outstanding shares are now owned by Berkshire. Buffett has remained notoriously silent on the causes of the sales. Possibly the greatest investor of all time is Warren Buffett. His portfolio is filled with top-tier companies that have the potential to increase shareholder wealth over the long term. Having said that, being a wise investor entails more than just following Warren Buffett's lead. Instead, wise investors should take a cue from Warren Buffett and evaluate his investments on their own to see whether they are consistent with their own investing preferences. You might find potential additions to your dividend growth portfolio by looking at the best yielding stocks in Warren Buffett's holdings. That's all we've got for you today. What are your thoughts on this? Let us know in the comments down below. If you liked and found today's video fascinating, please give us a thumbs up. Don't forget to subscribe to our channel and click on the bell icon to be up to date with the most exciting things as soon as it's released. Thank you for your time. See you in another video shortly.